The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. And you can see, if you're watching on YouTube, I've got beautiful Columbus, Ohio behind me at sunset. We are in the process of closing up a capital raise for our 53-unit value add deal there in central Columbus, just north of Ohio State University, where all the economic activity is going on. Hospital nearby that's expanding by $600 million, and the Intel plant that's being built in the northeast side of Columbus, $20 billion going into Intel, that factory, creating 10,000 jobs. So wanted to highlight that opportunity. Hopefully this will come out in time for you all to potentially jump in to that opportunity if you're interested in passively investing. It is a 506c offering, and that means it's for accredited investors only. So super stoked to have on Charlie Wessel on the show with me today. Dude, awesome to have you. He's given us the Hawaii, what's that called? There's a name for that, and I forget what it's called.
It's the hang loose, bro. I live at the beach. I live in Charleston, man. Live in South Carolina. So yeah,
hanging at the beach. Yeah. My best friend from high school and college, Chip Norris. He lives in Charleston, been there for 24 years. So yeah, I've been there numerous times. Love it there. So Charlie is one of my buddies from the Raise Masters network that we've mentioned many times on the show. And again, no official affiliation with Raise Masters other than being members ourselves and loving the value that we get from it. And I don't mind saying that for free. I love Hunter Thompson and his team, and just that, this whole network is your net worth thing is just such a fundamental truth in business and in entrepreneurial ventures, but especially in our space. I think it's just massively true. Like your ability to get deals done, to make things happen in the space really comes down to the relationships that you have in place and the value that you can create for other people and vice versa. It gives you the ability to partner up and get stuff done. So Charlie, yeah, right. So Charlie is with Cordell Capital, and you can check them out at investcordell.com, investcordell.com. And they basically are experts at facilitating opportunities to passively invest in alternative assets, in their case, basically turnkey real estate investing that creates passive income, minimizes risk, maximizes tax efficiencies, et cetera. So really excited to have you on, Charlie, and look forward to hearing all your thoughts on this opportunity and what's going on in the market today and everything else.
Yeah, absolutely. Tate, good to be here, man. Thanks for having me.
You bet.
Yeah. So we have just over, I 1,000 doors of multifamily. We got a 44 unit hotel in Tahoe, California. Probably the only thing I would buy in California, but yeah.
Tahoe's a wonderful place.
Yeah, exactly.
Yeah.
There's a lot of people on the left coast that like to go there and spend a lot of money. So it sounded like a good investment opportunity. So we brought some investors along with us to that deal. That one's got one of those outrageous returns. It was like in the 32% kind of thing. It was crazy.
Mm-hmm. Cool.
But anyways, and doing what we do, I mean, you can't even advertise that. So I was like, 19 plus.
Right.
You tell somebody those kind of returns, they're gonna be like, no, not true. Can't happen.
Yep.
So anyways, on the emails, we just put 19 plus. But yeah, so that, and now we have a short-term rental fund with a great group of people that are, I mean, they're taking it to an institutional level. I mean, they raised over $40 million last year. They'll raise close to $100 million this year. And they're really institutionalizing the space of short-term rentals, which nobody else out there has done so far.
Right. So, yeah, great point. So when you say short-term rentals, define that asset for us a little bit. It's not nightly rentals. It's not normal leasing. How does it fit in there?
So what they're doing is they have a proprietary software that links to the MLS. So they are buying single-family homes in the desired areas of the country that they're looking at. One of the big key factors in them investing is the site called and all the information that comes from the site called AirDNA. And what that does is that really helps investors look at their short-term rentals and what markets are hot, what markets are good, what markets are going to stay. Short-term rental friendly as far as the legislative part goes.
Yep.
And the guy who created AirDNA actually sits on the advisory board of our fund.
Okay.
So that's just a huge plus in our, he believes in it. We believe in it. It's going to be a good deal for a lot of people.
Yeah.
But yeah, they're buying these single family homes and then they're fixing them up, making sure there's like a pool there or something, fixing up the pool. There's basketball court in some of them. There's game rooms. They're all themed, to different themes. It's just a super cool business plan. It really is cool.
So is it the nightly rental model or is it different than that when you say short term?
Yeah, it can go. Yeah, short term rentals like nights, weekends.
Okay, understood.
Take your family to Scottsdale, Arizona for a week.
Yeah,
up in the Poconos in the mountains or down in Florida or
Yeah, understood. Yeah, so Airbnb basically is
Airbnbs. Yeah, that's what it is.
Airbnb's models. Yeah. Okay. Just because it's like kind of top of mind, have there been some significant Airbnb challenges here recently in terms of legislation and trends against the short-term rental market? Or there
have been, especially here in Charleston. Okay. Like, we're not buying anything here in Charleston. I mean, they shut that down out in Folly Beach, but like they're looking into areas that are really, Charleston's kind of hobnobbish.
Okay. Yeah.
So they're really looking into places that legislation is already in place to protect the Airbnb market. I mean, all of our properties, they're all marketed on Airbnb.
Yeah. All right. So before we go too much further, like, how did you get into all this, Charlie? What's your like entrepreneurial background or business background?
We owned a general contracting firm for just over 10 years here in Charleston.
Okay.
And I sold it in 2016 and started a roofing company. And we've always been entrepreneurs. My dad, he ran a big company in Raleigh, North Carolina for all of my childhood.
Okay.
And when he moved to Charleston, he still worked with that company, but he always really kind of gave that mindset to me and all four of my brothers, and all four of my brothers were entrepreneurs.
So five boys, huh? Five. Were there any sisters
boys
in there?
Yeah, man. I had a sister that came on when I was in high school, and I was like, oh my God, yeah. But she lives here in Charleston now. I still have one brother lives in Raleigh. Everybody else lives here in Charleston, and it's just it's good stuff, man.
Yeah,
all the nieces and nephews get together. It's so much.
That's fun, man. Yeah. So entrepreneurialism just kind of sounds like it's kind of in your DNA, and it's in like what you were taught, and like the culture of your family and the values of your family, everything else. And then how did you hone in on this specific space that we're in right now?
Yeah, we had rental properties, and this, that's a terrible idea. So we had, I went and talked to a buddy of mine about how to buy this huge office building. It was like $20 million. And I don't have a down payment for $20 million. And he was like, dude, buildings like that are owned by guys like you all over the world. He said, you got to grow a pair, go get your buddies, y'all all throw some money in, you buy it, you hand it over to a property management company like the one we own, and then we lease it up for you. And you just sit back and collect checks. He said, we take care of it for you. He did say, but you don't want to own that building because it's been under litigation for 2 years. He says there's not enough parking for the space there is in the building. Yeah. But he said, you know what, man, if you go and do multifamily units, he said that's the safest bet with the biggest returns. He said, office and warehouse and stuff like that can be a little tricky. You lose a tenant, it's going to take a while to get another tenant. Mm-hmm. You own an apartment complex, you lose a tenant, you get one in there really quick. So, yeah.
So that's pretty cool. Was it this guy? He was a broker, property manager. What did he do?
Yeah, he's a broker. He owns a big broker. A big brokerage downtown here in Charleston.
So two big takeaways there, because I love this point of like going to the point at which people kind of caught the vision for themselves at like what's possible that they can do inside of this multifamily space.
Yeah.
And number one, like you somehow, and I think kind of every real entrepreneur has this kind of hero's journey progression almost, but you somehow caught this vision that to at least look into buying an office building, which is like not too many people think that way. Right. And
yeah,
so the kind of the daring to dream, if you will, or just the way that you're maybe predisposed to think big, right? Like that was a big thing there. And then your willingness to get coached and like go to an expert and say, what do I need to do here? And for him to say, this is how you would do this. And by the way, don't do it with this sort of asset, do it with this sort of asset. And boom, all of a sudden you're on track, man. Like you've got a path forward at that point. I mean, I think that's super cool. I think that's a really cool story.
Yeah, we've always been pretty big dreamers.
Yeah. So is this guy
saying that though? Big dreamers get their feet knocked out from under them a lot.
100%.
You know what? As long as you keep it, then you'll reach it. So
yeah, 100%. Yep. I mean, if you go big or go home, there's times that you go big and you eat it, right? Like I'm a skier, mountain biker myself. I'm not a huge go big guy anymore at age 50, but I watch a lot of people go big and sometimes they land it and sometimes they don't, and but okay. So talk about at this point, basically your offerings as far as what do you guys look for in terms of investor returns, how do you structure things for your LPs, et cetera. Talk about that a little bit.
Yeah. I mean, we look for between 16 and 20% average annual return is what we look at. I mean, a lot of investors out there have no idea what an IRR is or even how to factor it.
Sure.
So we kind of gave up on the IRR thing a long time ago.
Yep.
When a guy who was worth like $15 million, which, you know, when you've been in this business long enough, this is going to sound crazy, but that's not a ton.
Yep.
But it's still a good little bit. But he was like, how do you factor IRR? And I was like, you know what? Don't even worry about it. I said, here's the average annual return.
Yeah.
And, you know, that's something everybody can figure out. You know, you just take all your distributions, take the, you know, projected return on sale and divide it out by 4 to 6 years, however long you're going to hold the property. So that's kind of how we look at it. You know, we try to keep things real simple. Mm-hmm. We really do. Yeah. You know, our portals is, you know, they're all very easy to navigate. Most people's are, you know, now. Yeah. When we first started back in 2017, they weren't. But, you know, we just try to keep everything, the whole KISS method, man. Keep it simple.
Keep it simple. Yeah, no doubt.
Yeah.
Yeah. So listeners, you can check out Cordell Capital, .com, the website, CORDELL capital.com, and get an idea for what Charlie's team is doing in the way of their portfolio holdings, the kind of assets that they target, and you know, contact information, resources, learning resources here as well, and a link to podcast appearances. So Charlie, on the investor relations front, what, you know, because I know that's your wheelhouse on your team. That's really what, you know, a large part of what you do.
Right.
Have you noticed a big change? I mean, this is kind of an obvious question, but what have you noticed in the way of significant changes in investor mentality, concerns like eagerness to invest, et cetera, let's say over the last 6 months to a year? And I guess I should probably contextualize this question by saying, from my perspective and from the perspective of other people that are around me raising, it seems to have gotten significantly more difficult on the retail side, on the LP side of things. What are you seeing, and do you agree with me? And what are your thoughts on all that?
You know what? I agree with you. And I think this is, I mean, you know, there's so much out there right now for investors to go into. And, you know, even though you've heard of some people that did the short-term debt thing where it, you know, kind of blew up in their face when they had to refinance here recently, there's still just not a ton of bad deals that have gone down.
Mm-hmm.
You know, there really isn't. So I don't know how, but this is our fault. This is our fault somehow. I mean, we beat the pants off the S&P. We beat the pants out of everybody's retirement fund.
Yeah.
I have no idea how or why it has become more difficult. Like, seriously. I mean,
it almost seems like it should be getting a little easier.
It really should.
Yeah.
Because, I mean, the deals that we do are so conservatively underwritten.
Yeah.
I mean, they really are, you know, and everybody that I know in this space are like stand up good dudes and gals, good guys and gals, man.
Yeah. Yeah.
I just haven't met that many assholes that do what we do.
Mm-hmm.
You know, I really haven't. Like, you go down to financial advisor's office or something, man. I mean, they're just treating you like another number, you know?
Yeah.
And
yeah.
I don't know. Somehow this is our fault and we have to turn this around. I think there's a lot of education out there. So I really can't put my finger on it, tell you the truth. I mean, we were at Race Masters in New Orleans 3 weeks or so ago.
Right.
And I mentioned to Hunter how, you know, usually within the first couple of weeks, we get a big pop of investors, you know, and I think we got like $225,000, $250,000 first 2 weeks. And I was like, what? That's ridiculous. This is an incredible opportunity for investors.
Right.
And he's like, well, that's like $600,000, you know, 8 months to a year ago. I was like, man, that's the worst thing I've ever heard in my life. I said, that's just the biggest excuse I've ever heard. And I think I even dropped a few,
expletives.
expletives in there. I was like, that's bullshit.
Yeah.
I was like, we have some of the best deals right now that are going around, and some of the best deals are to come, really.
Yeah.
Even though interest rates are high, I mean, there's so many assumable loans out there, and I don't get it. I really don't, because investors I don't know if they're just lazy, really. And, all the ones that really had a good chunk of money to put in and kind of put their amount in. I mean, it can't be the case, but, you get lazy people that just want to do, I just don't want to bother with it. My investment advisor has it. Okay, that's fine. They're going to retire with a little bit of money.
Yeah.
And I mean, we are almost doubling people's retirement
in 5 years. Yeah. Or 3 to 7 years.
The speed that ours accumulates is so much faster than putting your money in a freaking mutual fund.
Yeah.
I have no idea. It blows my mind. It really does boggle.
Well, I kind of like what you said, though, about it's kind of our fault. And what I mean by that is, like, it's our job to educate and let people know about this opportunity. And it's almost like we almost have to be like evangelical about it, like out there, just like absolutely pumping this message out. Like now more than ever, this is the asset class you want to be in. And here's why, right? And it's not hard to explain. Like, the hedge against inflation conversation is a pretty easy concept for everybody to get their heads around. And and then, of course, risk mitigation and just, the fact that you're buying an asset that provides a universal need, and your tax advantages, and et cetera, cash flow, appreciation, growing wealth. Like, it's such a compelling opportunity. And now, like I said, now more than ever, I think deserves everybody's like undivided attention. And so I think 100%. The better we can be doing, a better job we can be doing with that, the better for everybody, really.
Yeah, I'm going to I'll email you a article I emailed over to my assistant today that said, I think 2022. I mean, like the majority of all retirement accounts dropped 15%. And then by the end of the year, it had come back up 10%. I was like, you still lost 5%.
Yeah. And you just went through this roller coaster ride of volatility.
Yeah.
That's insane.
You're sweating it. Yeah. I mean, I don't know. I don't know of any deals that are doing that. I don't know any deals that are doing that.
Yeah. And so again, like another context is like the alternative to the stock market that we offer, right? Like, that's an easy one, especially on the bad days when the stock market crashes and comes, whatever. The volatility conversation is so easy.
Right.
And then you can really niche into like either your market. Like, I can talk about how resilient Columbus was in the last recession, the 2008 crash and whatnot, and how stable values held there. And you can talk about short-term rentals and how demand in certain markets is always going to be there and always going to be growing. And there's ways of kind of massaging that conversation where into these alternative asset classes backed by obviously real estate, cash flow and real estate. And it should be a very compelling message to get out there. And now I'm saying it and thinking about it, like, you don't hear it a whole lot, right? Like, I follow a lot of Instagram folks and not really hearing the arguments, like the now more than ever argument, I guess.
Yeah. No, it's and coming up, I mean, there's good deals out on the table now, and there's good deals that are really going to be coming here in 2024.
100%. Yeah. So, So, in my space, like this is a cool conversation to be having, because we at Greenlight, Carl York and myself and our team, we're really like, our superpower is the acquisitions process, the deal sourcing, which of course is, involves broker relations and just doing good deal analysis and underwriting, and then of course offer negotiation and et cetera, all the things that it takes to get deals done. And we're kind of like good at that, right? When we've got enough of it in these roots in these markets now that we're in, these Oklahoma City and Columbus, that we're able to get good off market opportunities, et cetera. Our bottleneck is like what you're doing, Charlie, which is the capital side of things. So, I guess we're always trying to get better too at our direct investor relations program, and we're likely going to be growing in our staff in that area, if not our team members. So, I guess overall, like, since this is kind of the ocean you swim in all day, every day, like, what are your kind of like overall thoughts about what it takes to be, get done what you need to get done, like still effective at raising capital in this environment?
Like you said, being evangelical about it, dude. I mean, we post on social media every day, multiple times, some days.
Yeah.
We send out emails to a big list. It's a big list. I mean, it's well over 1,000 people. And, we just keep trying to get the word out, man. I mean, everybody I talk to, I tell them what we do.
Mm-hmm.
All the guys I play golf with at my country club, they all know what I do.
Right.
Everybody that, all my friends on Facebook and or all my friends, they come up to me and they're like, "Hey, I've been seeing your posts on Facebook about this, that, and the other." And I'm like, that's what we do, man. We make people money.
Yeah. That social media piece is just, to me, if you're missing the social media piece, you're missing it. Like,
and what I've learned is that you really don't know how many people it's actually reaching.
Oh, that's huge point right there.
A lot of people that come up to me, I'm like, well, freaking like it, share it, man. Seriously, we are helping people out here.
Yeah.
So share it with your friends, share it on your Facebook page or whatever. Or Instagram or whatever. I mean, I have people that do all that. They put all those posts up for us. But it's just one of those things where I'm, so many people come up to me and they're like, "Oh yeah, no, I get your emails. I see them all the time." I'm like, "You read them?" They're like, "Yeah, we read them." I'm like, "Well, what are you doing? What the hell are you doing? What are you waiting for?"
Let's go, right? Let's go.
Let's go. What are you waiting for?
Yeah.
We don't need you. We do need you, but I mean, to do more deals and, make more opportunities present. But I mean, they need us more than we need them.
Yeah.
And somehow they got to understand that.
Yeah. And again, it kind of comes back to us, right? Like it comes back to education. And to me, it's not a sales pitch, right? It's just an education. Like, this is what we have to offer. This is why you may like heavily benefit from being involved, and, kind of go from there. It doesn't really need a pitch or a close or anything like that at that point.
I mean, seriously, the you need me more than we need you thing. I mean, we just sent out an email, I don't know, it was a couple months ago, where I was like, "Please unsubscribe from my list." That was the subject.
Yeah.
And I was like, "Look, you don't want these emails. I don't want you getting them. So please unsubscribe."
Yeah.
Like, if you are serious about this and really want to, make a change in your retirement and what that looks like, then reach out.
Call me.
We'll have a call with you.
Schedule an appointment. Call to action.
Absolutely.
Yeah, for sure. I like that one. That's a good one. Any, like, as far as growing your list, your investor list digitally, anything that's working well for you, anything that maybe that you're seeing that you're going to implement that's working well for other people, or, just.
We're doing a lot of direct messaging right now on LinkedIn.
Okay.
That's working pretty well.
Nice. Okay.
I think we have like almost 9,000 followers on LinkedIn or something. So it's it's grown quite a bit.
Yeah, that's tremendous. And are you able to gain some traction in terms of converting those into like members of your ecosphere, so to speak, your investor list? Or
yeah, I mean, right before our call, I had a call with a guy that we DM'd, and he's going to invest in our short-term rental fund.
Got it.
And he wanted to reach out to a couple of investors for and I was like, yeah, sure. So I just texted two of them. I texted like four of them, but the first two that came back, I was like, hey, do you mind if this potential investor gives you a call? And they're like, absolutely. Come on, man. I mean, you're doing great work for us.
Yeah. Yeah. So I think that, the key takeaways here is, for listeners, I think is like, there's no one secret bullet here, right? Like you're kind of doing all the things. Like you heard Charlie talk about, in networking at the country club with his golf buddies and being all over social media so that when people see him, he's top of mind, right? And his posting is top of mind. And you can tell that that's working when you get feedback like what you've been getting. And then, growing the investor list and marketing and educating that investor list, educating on social media, right? Like becoming an expert and becoming an educator on social media. It's all of those things, right? In my opinion. And again, I don't know that there's like a secret bullet, but I think doing all of those things really well is key. And I think also the only other thing I would add is having a really killer, valuable, downloadable asset that you can build essentially a funnel around, right? Is a tremendous thing to have in place, because you can go anywhere and say, either text it blah, 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 blah to this, or go here and download this, or give them a call to action, right? That gets them in touch with you immediately.
Right. Yeah. And that would be our investcordell.com page where they can go on, they can download the stress-free investing guide.
There you go. Yeah.
That's the ultimate guide to wealth without worry, investing in large real estate. So that's what we do.
Yeah. That's perfect. Yeah.
You invest and we do the rest.
Yeah. All right.
My assistant just came up with that a couple days ago. I was like, I like it. That's cool.
Yeah. I mean, it tells a story, right? Is that a golf ball I just saw in your hand?
No, man. It's like a squeeze thing.
Got it. So other than golf, what is that your jam, Charlie?
It is, man. There's 3 golf clubs sitting right over here. Then my office goes back down the hall there. So I got a little putting mat. And usually as I'm talking to investors, man, I'm sitting there and I'm putting the whole time.
All right. So
that's my jam.
So listeners that may want to invest in short-term rentals, they can come out to Charleston and maybe play a round or two with you. Right?
Oh, we'll take you out, man. We'll take you out. We'll have a big time.
Awesome stuff. All right. Well, Charlie, thank you so much. This has been really great, really enlightening conversation. Appreciate your enthusiasm for what you're doing and your working knowledge and everything, all the wisdom that you were able to drop on the listeners here today and myself. So thanks a ton.
Loved it. Thank you so much, Tate. Appreciate it.
You're welcome. Listeners, thank you. Love you guys. And we'll see you on the next episode of The Apartment Gurus. Take care, everybody.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.